But discrimination isn't always that obvious. It's sometimes more subtle, but in many ways more insidious. And institutionalized discrimination that's hidden behind a smiling face. Housing agents who say, well, there are no vacancies right now. That you just didn't qualify for the mortgage because your financial credit history wasn't good enough. Last year, the Federal Reserve Board found African Americans are denied credit for homes at twice the rate white Americans are. And it is pervasive. It's what we found in the banking case in Texas, SacuBank in Texas. Discrimination in lending, discrimination in rendering mortgages. The bank has agreed to change its practices, as you heard from the Assistant Secretary. The bank has also agreed to a $2.1 billion agreement where they'll make $2.1 billion available to families who are low and moderate income across the country for mortgages. About 15,000 low and moderate income people will now be able to buy their own home because of the settlement we announced today. $2.1 billion is by far the largest settlement ever rendered to the federal government to settle a fair housing case. And in closing, the message of today is clear. You've heard it from a number of us now. This is a nation of laws, and this administration will enforce the laws. We'll take questions at this time. Yes, sir.
So this company will end up loaning this money and presumably...
Well, $2.1 billion that would not have been available to families of low and moderate income, low and moderate income families across the country. About 15,000 families we estimate will get mortgages who would not have gotten mortgages otherwise. But aggressively to take a greater risk on these mortgages, yes. To give families mortgages who they would not have given otherwise, yes.
Get the loans at all. They wouldn't have...
They would not have qualified but for this affirmative action on the part of the bank, yes.
Minorities are represented in that low and moderate income group?
It is by income, and is it also by minorities? Yes. With the $2.1 billion, lending that amount in mortgages, which will be a higher risk, and I'm sure there'll be a higher default rate on those mortgages than on the rest of the portfolio. That is the remedy that we sought, and the remedy that I would prefer, 15,000 families. This is of a scope so beyond anything that we've really done in the past. We had one settlement just a couple of weeks ago, which was part and parcel of this, which is in the range of about $1 billion. But after that, the closest settlement was $300,000, $400,000, $500,000. So this is of a scope that much surpasses anything we've done in the past.
There was the Community Reinvestment Act, or CRA, passed in 1977 during Jimmy Carter's first year in office. The law increased oversight of financial institutions to ensure that they were giving credit to low-income families.
We're going to make sure those banks do it and they don't discriminate. But the law went overboard. Institutions made loans they probably didn't want to make because they couldn't seem racist. It empowered these community groups who would then bully the banks. Acorn bullied the banks.
Indeed, Acorn, the Associations of Community Organizers for Reform Now, would before long come up with a new tactic, challenging a thrift merger in Illinois, claiming they didn't make the kind of loans that Acorn felt were required under the CRA. A young community organizer named Barack Obama worked closely with the Acorn activists behind the new strategy.
I've been a community organizer and helped design programs at the ground level.
And that strategy worked. Acorn prevailed in court, and soon credit standards were being lowered across the country. While at first Fannie actually resisted buying up some of those shaky mortgages, at the tail end of the Clinton administration, Fannie Mae was told to substantially increase the percentage of those mortgages in its portfolio.
Acorn's attorney was, well, you guessed it, Barack Obama.
I have a background as an attorney. I've represented affordable housing organizations that build affordable housing, something that's a major issue in the district.
Back in the 1990s, they used strong-arm tactics to force banks to give high-risk loans to low-income borrowers with bad credit.
Acorn uses militant tactics. They call it direct action. Sometimes Acorn will actually send people to a bank official's home. They'll scare him, they'll scare his kids. Again, all in an effort to get the banks to make these bad loans.
You've gone back to Chicago and civic rights, civil rights.
Right. I'm currently a practicing civil rights lawyer, which means that I get involved in a whole range of different issues that touch on issues of race.
We look at the subprime mortgage fiasco that's taking place today. Subprime lending started off as a good idea, helping Americans buy homes who previously couldn't afford to. Financial institutions created new financial instruments that could securitize these loans, slice them into finer and finer risk categories, and spread them out among investors and around the country as well as around the world. In theory, this should have allowed mortgage lending to be less risky and more diversified.
Who do you think is to blame for this current mortgage and credit crisis? Who do we see about that?
Well, I think there are a lot of folks who have to take some responsibility. The original idea was a good one, which was, let's see if we can distribute risk more broadly and make it easier to provide loans to people who otherwise might not be able to get them.
Now, up until then, Acorn has managed to fly below the radar, but their dangerous practices are coming back to haunt them and the rest of the country. The economic crisis facing the nation is due in large part to this disastrous decision by financial institutions Fannie Mae and Freddie Mac to buy up risky loans from small banks. But it's groups like Acorn that force those banks to give out those loans in the first place.
What do you think of the Acorn scandal, and how do you think it will affect the election?
The Acorn scandal is a big one. Acorn has received over $760 million in fees alone. This is what we know about, and there's a lot of stuff that's still kind of bubbling up to the surface. But here's an organization that essentially helped strong-arm a lot of banks into making loans to people who couldn't pay them off, so the so-called ninja loans, no income, no job, no assets. At the heart of what has kind of brought about the financial collapse is this rather unconventional idea that we would just loan money out if a person had a pulse.